Friday. What's up, everybody? Friday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. We're going to do what we do every Monday, Wednesday, Friday, identifying four major markets, S&P, NASDAQ, crude oil, and gold. And sometimes we throw the euro in there just for fun, looking at what might be some of our trade setups for today. If you're new to the channel, click the subscribe button, hit the notification bell so you get the alerts and the updates. But let's go ahead and dive right in. Now, remember, this morning, we have major inflation news coming out at 8:30 a.m. Eastern Time, so in about 40 minutes or so. So by the time you get this, the market could be doing a whole bunch of different stuff. But we're going to take a look and see what's happening as of now, knowing that I want to be pretty cautious about any breakout trades with the inflation numbers coming out. So looking at this, we've got a couple of areas on here that gave us a little bit of a bounce in the S&P from Wednesday. So there was this little area here, which was a trap, got a nice little bounce out of that level, came back in, tested it a second time, and then broke through it yesterday. So the next area that we have, we've got a potential breakout area up here, which we spoke about on Wednesday, and that level is still valid, but we have started to show a little bit more weakness. Now, in my mind, we're in between quality areas of supply and quality areas of demand ahead of CPI numbers. Now, we've come close to this level here without getting in, and so with that being the case, what I'm going to do is switch this to a confirmation entry because we came close without giving us an entry. Remember that when you do a confirmation entry, it's got to trade 50% into the level in order to activate the trade. So that would be our activation line, would be about 46 quarter would be our activation line for the trade. If I go to a smaller time period, say the 15-minute chart, you don't really have a lot of clean areas here. You see that there's a lot of these upper wicks, lower wicks, upper wicks over top of one another. I call that a thorn bush. It's kind of like reaching into a thorn bush. You may go in and get a nice, delicious berry, but there's also a chance that you're going to get stung by the thorns and you're going to come out bloody. And is it really worth the berry to come out bloody? I don't like those kind of levels. I actually like to avoid those kind of levels that are overly wicky because I tend to find that those levels are not reliable. And so on an hourly chart, that actually doesn't look like a bad area where you would anticipate a little bit of a reversal. But the fact that we've got a big announcement coming up is gonna kind of keep me away from that. So I'm going to let that go for today. I'm not going to try to trade in between these areas. As long as we stay in between these areas, there's probably not a whole lot for me to do on the 1 hour or 15-minute time frame. Moving to the NASDAQ, you can see the NASDAQ, we had this little 15-minute level. We got a nice bounce off of that zone, rallied back up, put in a bit of a double topping pattern. We've come back into this this origin of this move up that we talked about on Wednesday, and we've gotten a little bounce off of it, and then it just kind of went, and that's a technical trading term, by the way. In case you're wondering, I only use technical trading terms. No, I'm going to leave this box here. But I will say that we could have a bit of a breakdown area in here. I just don't want to do it right around the announcement. Okay, I don't want to do it right around the announcement because the announcement is sometimes you'll get a false breakout. And for those of you that are unfamiliar with false breakouts, sometimes you'll get something like a candlestick that will look like this, where you have a big red candle on the announcement, right? And then 30 seconds later, that candlestick will look like this. With a long tail coming down from it, right? And then 30 seconds after that, it'll have a long tail going up the other way. And sometimes that's just wiping out stops on both sides of breakout trades. And so I don't like taking breakout trades. I don't like taking breakout trades around major announcements because that's really the downside of what can happen. Now, unlike the NASDAQ, the S&P, unlike the S&P, the NASDAQ does have a cleaner area right here, which I do kind of like. This is a little bit of a drop. We based into here. Now, we came down on this lower wick and back up and rallied back up. So the question is, did that level retest itself, if that makes sense, when I go to a 15-minute chart? And when I go to a 15-minute chart, once again, taking a look at this, we do see that we came down, broke through it, came back up, and then dropped away. So, and then gave itself a retest right here with this wick. So while I like that level on the hourly chart initially, when I look at the kind of a zoom lens, I don't like it as much. I am still going to leave the level on the chart, but I'm going to make it a 15-minute level and a confirmation level at that. So that's really where I think you could see a little reversal today if price comes back up into that region. Moving over to crude oil. So looking at crude oil, we had our breakout from the other day. That breakout has worked extremely well. That created a new reversal level down here for a potential buying opportunity, so keep an eye on that. And then this area here we came really close to without getting in twice. So that's too much for me. I'm not a huge fan of that. I do think that we may actually get a little breakdown below 70.39, but once again, no trading on breakouts around the CPI numbers that would be coming out. And gold. So looking at gold, we had talked about the other day the fact that gold was just kind of meh, and we had a little demand area in here. Now, price did come into that area, and we got a nice move away for a nice little 2-to-1 move away. And now, if I look at this just purely from a price action standpoint, I'm actually seeing a pretty strong price pattern, which I'm a fan of, coming down from here, where I think you could see a reversal in price dropping. Now, all things being equal, I would think that that's a good setup and a chance to get short on a retest back up into this region, especially this region right here. Just be aware of the fact that we've got CPI numbers coming out, and those are going to be very important and something that we need to pay attention to. Now, numbers can mean a lot, and so it can blow the market right through quality areas. I'm going to show you an example of that. The stock of the day that I gave you on Wednesday was Roku, if anybody remembers, R-O-K-U, Roku. I thought, hey, we're poised for another drop back down in Roku. And I was totally wrong. And I won't say that I was totally wrong. An unknown news announcement came out that I had no clear control over what was going to happen. Roku and YouTube came to an agreement on how they're going to handle YouTube TV and the Roku app, and it caused the stock to not only gap up, but then run up after the gap. Now, first of all, we gapped above our supply zone, so there's really no entry in that trade anyway. And the markets have continued to trade down from that point. Looks like this morning we're going to open up a little bit higher, around 239. But my point behind this is to say my technical analysis was not wrong, and I don't mean that to say that I'm always right, because that's not the case. If you can sometimes follow every single rule, right? We followed the general big picture trend direction. The market gave us a quality area of supply. The trade was to get short on a retest back up into this area. What changed were the outside forces of news that gapped us above that region. Doesn't mean that we've changed our trend. Matter of fact, we're still in a downtrend. And yesterday was a big profit-taking day after Wednesday's big move up. And so I just want to kind of point that out to say, listen, sometimes that's going to happen. You need to be all right with that. And I still think that the better probability is this thing to continue to trade down and reach a better, a more fair price around 175 to 165. And so you might have to get in on a different way, but I think that is probably the better way to think about Roku going forward. And so same thing happens with this morning's CPI news announcement. Market comes out, makes a big news announcement. All your levels mean nothing, right? Your levels don't matter as much as when the market wants to shove price through an area, it's going to shove price through an area, and there's nothing we can do about it. That's why we always have stops, we always manage our trades, and we always place protective positions. So that's all I have for today, everybody. If you guys have any questions, as always, send us an email, support@tradersarmy.com. Until tomorrow, we got a trade plan class tomorrow, so those of you joining me for the trade plan class, look forward to seeing you tomorrow. If you'd like to join our trade plan class, it's a 3-hour class on how to build an effective trade plan. Go to tradersarmy.com. You can find information on the site. All right, everybody. Talk to you soon. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.